So hypothetically, let's assume that your business makes $100,000 a year and you have $50,000 of expenses. So you have $50,000 of profit, and now you have to pay taxes on this $50,000 of profit. And I'm going to assume that we're not talking about your salary here. This is just the business's profit. Well, when you make your money as a business, this is that earned income tax rates, the higher tax rates, but there are things that you can do to lower your taxable income if you spend your money strategically. For example, in a business, you were allowed to spend money on things that are ordinary and necessary for your business. So if you need a cell phone to run your business, that could be a write-off for your business. You buy that phone, you get a tax deduction. You need a laptop for your business, you can buy the laptop, get a deduction for that business. If you need to go on a trip to Hawaii to look at rental properties, to meet a business partner and need to stay at a nice hotel, well, that flight, that hotel is now a tax deduction. And if you need to go with your business partner who happens to be your wife or your husband, and now you get to stay at a nice hotel and you have to do some things in Hawaii because you're there for a business trip, well, those things can then become a tax deduction, assuming it's ordinary and necessary for your business if you can document that you went to Hawaii and did business there. And then we have a newly modified Section 179 rule, which says that because of Section 179, if you buy heavy machinery for your business, you can take up to a 100% write-off on that machinery in year one. Now, if you are, let's just say, a podcaster, a TikToker, you have a food blog, you might not need a big piece of machinery, but maybe, and this is just an example that I had my accountant give me, maybe because you have the social media presence, you have to look like a big baller. So you gotta get a G-Wagon, because every big baller on the internet has a G-Wagon. Now, I don't recommend you do this because I think it's a stupid financial decision to buy a G-Wagon to lower your taxes, but let me show you what some people are doing and how the tax code can work. A G-Wagon weighs over 6,000 pounds, so it gets to qualify for this heavy machinery deduction. And this G-Wagon, let's say, I'm gonna draw it right here. It's gonna be a pretty ugly drawing, but let's say this G-Wagon costs $100,000. And then you take $20,000 from here and you put it down. So you use $20,000 as a down payment. And let's assume for the purposes of this example that you use this G-Wagon 60% for business, 40% for personal use. So if it's 60% for business, that means you take 60% of the value of this G-Wagon, which is $100,000, and now you can take the $60,000 and use it as a tax write-off. Remember, you only put $20,000 down. And I don't recommend you should finance vehicles at all. I think you should buy cars in cash because they're depreciating liabilities, but I'm not talking about the financial education side. I'm teaching you about the tax side of things right now. You put $20,000 down, you still have 30 grand in the bank, and now you get to take the $60,000 deduction, which means you are gonna have a negative tax. Because why? Because, well, you had $50,000 of profit, you take the $60,000 deduction, you have minus $10,000 loss. And now if you work a job, or your spouse works a job, you can take this $10,000 loss and you can reduce that job income because you have a loss in the business. Now remember, in this case, you still have $30,000 in the bank because you made $50,000 of profit, you put $20,000 down, you have 30 grand in the bank, but because you get to take the 60% write-off on the value of the G-Wagon, that's why you now have a negative $10,000 loss on your taxes, which you can use to offset your gains, which means if you start a side hustle for your business idea, and that side hustle has an actual business plan that you can document, and you spend money on that side hustle. Maybe you have a cooking blog that you start, maybe you start a podcast, maybe you start whatever it is that you're interested in, and you spend money in it, and you're generating some revenue, but you're losing money. Well, that loss that you have for your business investment can be used to potentially lower your income that you make from your job, which means, yes, you can make that money from a job and use some of this loss to offset some of that income. And in certain instances, depending on what it is that you're purchasing, it could be a paper loss, not an actual loss on your bank account. This is why it's so important to understand how the tax code works. As you start to earn more money, as you start to invest your money, I highly recommend you go out and start investing a little bit of money to find yourself a good accountant or a good tax advisor, because they can help you lower your taxable income. And I get it. I mean, nobody likes paying for accountants and that type of stuff, but it will be a few $100s well spent, and then as you start to earn more, it might be a few $1,000s, and as you earn more, it might even be more than that, just depending on how you're earning your money. But I'll tell you from my experience, a cheap accountant can be very cheap. I used to have a very cheap accountant, and they were a cheap fee, but they ended up costing me a lot of money in late fines, fees, and overpayment in taxes. And then when you find a good tax advisor, and listen, I am a licensed attorney. I don't do my taxes myself. I find a specialist who this is what they do. Find somebody who can help you with tax strategy. I'm telling you from my own experience, because there's a very big difference between just filing your taxes and doing tax strategy with you, because tax strategy is meeting with you every month or maybe every quarter and going over what does your taxable income look like and what are things that you can do to lower your taxable income based off of changes that are happening in the tax system. So as you start to earn more, get yourself a good tax advisor, a tax strategist. And again, for those of you that want to become investors or are investors, I have a free investing masterclass for you down in the description. And finally, if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor to help spread this type of financial education that we should have learned back when we were in school. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.